It's tax time. We've got lots of practical advice. Let's begin.
This is Debt Free in 30. Here's your host, Doug Hoyes.
Ian Martin has made the very short walk from his office here at Hoyes Michaelis, which is right next to the podcast studio. We actually share the wall with the clock on it. So Ian, thanks for making the trip to talk taxes. Ian is, according to my notes, a licensed insolvency trustee. That's true, right?
Yep.
And he's also a CPA, and he also spent a few years working at CRA. So he has lots of tax knowledge, and he supervises our tax group. So Ian, welcome back to Debt Free in 30.
Thank you, Doug. It's always a pleasure to be here.
So let's start with the obvious question, and then we're going to be practical. That's all we're going to do today.
Right.
Practical. So first question is, why should I file my taxes?
Well, I mean, there's a lot of reasons to that. I guess the biggest thing is that not filing your taxes potentially has a lot of significant financial costs associated with it. You know these well, right? There's we call them the P&I, the penalties and interest.
The P&I.
Yeah, write that down.
Okay, P&I. So let's talk about penalties first then, because in fact, I did some show prep.
Yep.
And I have it in front of me here.
Okay.
And what we're going to do is we'll put links to all this stuff in the show notes. So I went to the CRA website, which you probably go to like all the time, but
10 times a day.
10 times a day. So is this true? The late filing penalty is 5% of your balance owing, plus an additional 1% for each full month that you file after the due date to a maximum of 12 months.
Right. It's very, very significant.
That's a lot of money then.
Right.
So if I owe $1,000, 5% of that is how much?
50.
$50. But then I'm going to pay 1% of $1,000 every month.
Right. And that might not sound huge, but I mean, we see this all the time, clients where it's not $1,000. Like every year it's $10,000 or $20,000.
Then it could really add up.
It can really escalate very, very, very fast.
Well, it also says on their website, if the CRA charge you a late filing penalty for 2020, 2021, or 22, we're going to whack you double.
Right. So I used the word escalate just a moment ago, but this is a great example where, a first-time offender, you get hit with this 5% that you're mentioning. But if you are a repeat offender in the recent past, it escalates to 10%. And instead of 1% per month, it's 2% per month. So it really, really, really snowballs very, very quickly on you.
That sounds pretty bad. Okay, now
so you had a very unpleasant look on your face.
Whoa,
there.
that's bad. Now you said P&I,
right.
Penalties and interest. Okay, so we talked about penalties. Tell me about interest. So obviously they charge an interest rate on what you owe.
Right.
What's the interest rate now?
Yeah, so they call them prescribed rates. So they get adjusted every quarter. And I mean, they fluctuate up and down just with like Bank of Canada rates, like everything else. So right now, I mean, the one that I keep in mind is like basically the personal tax. So right now, the prescribed rate on personal income tax owing is 10%.
And that is the rate that will be in effect from January 1st, 2024 to March 31st, 2024.
Yep.
So if you are watching this after March 31st, 2024, it could be different.
Right. It gets reset, every 3 months. And, back in the day when I worked at Canada Revenue Agency, we were very well aware of these rates. You could look at the front. I mean, 15, 20 years ago, we all had paper copies of the Income Tax Act. And right at the front of the act, it had like the chart with all the quarterly rates and going up and down, stuff like that. But this is a debt, right? This is a debt that you owe to the government, and there is a due date, right? So your tax, we're talking about this in February of 2024. So if you're doing your income tax for 2023 in the next couple months, and you owe money, the due date for that is April 30th of 2024. So you've got potentially that penalty that we talked about. You now have interest compounding on it, and it's measured from that due date of April 30th.
So I want to talk more about due dates. But first, back to this whole concept of why do you have to file your taxes? So first reason is if you don't file them, you get whacked for potentially penalties and interest.
Right.
Now, if I don't owe any money.
Right. I was going to jump in there because that's kind of an interesting idea that like, the penalties and the interest we were just talking about, they're calculated based on the amount that you owe. So some people take a very novel approach to that and they say, well, okay, if I don't owe any money to the government, what's the financial cost? If I don't owe, then there's no interest on it. There's no penalty because that was a percentage of my balance owing. If they owe me money, what's the cost? I've even had some people say to me, well, I very novel interpretation of that when they say, oh, well, I don't feel I have to file my taxes, right? That's not true. That's not accurate. But they've interpreted it to say, well, I'm going to file my taxes every few years. The government always owes me money. There's no consequence because they owe me money. But to me, that is kind of bonkers because, number one, if you don't owe them money, most likely they owe you money. So number one, getting your taxes filed means they're going to give you the refund that you're entitled to. So does it make sense to leave your money with, Mr. Trudeau or the government of the day? My answer is no.
No, it does not make sense to give him any more money.
No.
So, okay, if I don't owe any money, I'm not going to get charged penalties and interest because there's no interest on nothing, but I'm also not going to get money. So you highlighted the first one. You won't get a tax refund if you don't file.
Right.
But there is also government benefits.
Right. We have a whole list of benefits here, right? And they only calculate them based on your income tax information. So if you don't file your taxes, they cannot determine, are you eligible for these amounts? And they're not going to pay you until you get your taxes done.
So the first benefit I have on my list here is what we used to call back in the old, you remember this, Keen, because you've been around a long time.
I'm laughing, yes.
I know. What we used to call the Climate Action Incentive Payment.
Yeah.
But as of February 2024, now we call it the Canada Carbon Rebate.
That's
the
right.
CCR.
Not to be confused
with the band.
Yeah.
So, and that for a single person, I think now it's up to like $140 a quarter or something like that. So if you don't file your taxes, you're not getting the CCR, formerly the Climate Action Incentive Payment.
Right.
You also won't get the Canada Child Benefit, which of course you only get if you have kids.
Right, and people use lots of names for that, right? The official name is the Canada Child Benefit, the CCB. When I was a kid, my parents called it the baby bonus, child tax benefit, whatever. But this is a pretty significant one for families. It comes on the 20th of every month. Like, that's a big number for a lot of people. A lot of people really, really count on that money.
Yeah, if you have relatively low income and a bunch of kids, you could be getting $1,000, $2,000, even $3,000 a month. So it's not trivial. And my understanding is it resets in July.
Right. So the tax year or the calendar year is what they call it, the base year. So if we use the current year as an example, so in the next couple of months, people will be filing their 2023 taxes. So 2023, your income tax information, your dependents, that's the base year. But then that resets the benefit year that runs from July of 2024 through to June of 2025.
Gotcha. So you got to file your taxes or else starting in July, you're not getting your Canada Child Benefit. Right. Now, there's also something called the GST HST credit, which I guess if you're in different provinces, it's either GST or HST.
Sure.
And that's, again, like the CCR. It's a quarterly payment for low and modest income individuals and families. You don't get that if you don't file your taxes.
Right, exactly.
And then there's a bunch of other stuff, Advanced Canada's Workers' Benefit. There's provincial benefits in Ontario, Trillium, and a whole bunch of other things. The point is, you don't file, you don't get them.
Right.
It's real simple.
Right, exactly. And I mean, there's different eligibility criteria, and some of them have what I would call an income test, where if your income is too high, you don't get it. So the government simply can't, they'd say, they're throwing up their hands and saying, well, we don't know. We don't know if you're eligible, Ian, because you didn't file your taxes, you dummy.
So file your taxes, you dummy. So, okay, so that kind of makes sense. Now, what I'd like to do now is hit all the practical advice here. So you already alluded to this first one, and that is about deadlines. So walk me through what the deadlines are. So the first deadline you mentioned is when I have to file my taxes.
Right.
And you said April 30th. And I assume that if April 30th is a Saturday or a Sunday, then they give you an extra day.
Right. Yeah. If April 30th, that's the tax date in Canada.
So in 2024, April 30th is a weekday. So that'll
I didn't think to look at the calendar, but but you're right. If April
people put comments in YouTube.
I'm sure they'll correct us, right? But you're right. If April 30th was a Saturday, then that means the first Monday, the first business day would be May 2nd. So that would be the filing deadline.
So if we back this up, the law says, again, I've done a lot of research for this. So I'm telling you,
I'm impressed. Yeah.
None of these laws have changed in 50 years, so it's not really that impressive. But your employer is required to give you your T4 slip by the end of February.
Correct.
Which in 2024 is, well, by the time this show airs, I'm sure leap years already happened, but February 29th. So the first deadline is you can't really do anything until you get your stuff.
Right.
But so February 29th in 2024, the end of February is the deadline to get your T4 from your employer. It's also the deadline to make your RSP contribution that can still be deducted from last year.
So that's always 60 days into the new calendar.
60 days,
right?
okay.
Well, let me jump in with another deadline because, I mean, we talk to people, you and I, as trustees, we talk to people all the time who have tax issues, either, potential new clients, existing clients. I have some people who are really, really eager to make sure they stay on top of their tax stuff. And so I was getting emails and calls from people like a month ago. So we're recording this in late February of 2024. But some people were shocked to find out that basically the Canada Revenue Agency e-file system basically shuts down for roughly 4 weeks or so in January. So the earliest that you could e-file a 2023 personal income tax return in Canada was February 20th. So I had some people who were like super keen, and even though there was the deadline for the T4, their employer was on top of it, and they had their T4 already. They wanted to file, but they couldn't. And I said, no, that's normal. Like that's normal. February 20th is the first date you'll be able to e-file your return.
Yeah, and I think I've always considered March 1st, which again is in the past while people are watching this. That's really the start of tax season, because by then you should have all your stuff and the system is open. So, okay, back to deadlines then. We talked about the RSP deadline and when you're supposed to have your T4, which is 60 days after year end. And then you already said the deadline to file your taxes is April 30th. Explain to me the difference between the deadline to file your taxes and the deadline to pay your taxes. Is it the same thing?
Well, yes and no. Right?
Yes and no.
Yeah, and I mean, ultimately, I think what really matters to the government is the money part of it. Like ultimately, the return is the information from which they determine, do you owe them money or do they owe you money? So, I mean, the filing deadline is April 30th. If you owe money, it's April 30th. But sometimes it'd be a bit of a weird situation, but sometimes people don't have the actual return filed, but they've got a kind of an idea what the number is. And they actually pay kind of an estimated number before April 30th because, one of the first things we talked about was the penalties and interest. Ultimately, I mean, that's, based on the amount that you owe. So if you get the number wrong and you pay it on April 27th, say, and then you don't file your return until after April 30th, if you paid it before April 30th, then you're avoiding most of the penalties and interest. But again, I think if you're proactive, unless there's a really compelling reason that's going to prevent you from doing it, you want to be filed and paid by April 30th, if at all possible.
Yeah, and I agree. File it in March, file it in April, pay what's owing, then you're good.
It's kind of human nature that we get really busy in our lives with like work and family and whatever, and then we kind of work to the deadline. And income tax is definitely one of the topics in this world that, somewhat understandably people procrastinate on. It sounds crazy, but I don't want to say I'm a procrastinator, but I don't enjoy doing my taxes. Yeah. It's not complicated, but I've had times in the past where it's not until April I get it done. Now it's like, just get it done. Or early March, just sit down, get it done, get it over with, and one less thing to worry about.
Yeah, I totally agree. And what does June 15th mean to you?
Right. That's I'll tell you what it means, although I don't really have a good explanation for it. So this is for somebody who is self-employed. They are, again, the return is the information, right? That's saying, okay, here's my income and my deductions for last year. So if you're self-employed, you don't have to file the information return until June 15th. But if you happen to owe money on that, which again, most self-employed people do tend to owe money, then that was still due by April 30th. So why do they have these two different dates, Doug?
Because it's stupid. That's the answer.
Right. And I'm sure somebody somewhere, when they created this, there was some kind of a logical explanation. I don't know it.
Well, it would have been, we'll give them a bit of extra time to get them filed. But if you still have to pay the money, you kind of need to get it filed so you know how much you owe.
Right. So when somebody says that to me, and I'm sure you've experienced this over the years, I speak with self-employed people that they don't know, they know the June 15th date, but they don't know that the money was still owed by April 30th. So they're working to the June 15th deadline, they get it filed on time, and then they don't realize that they do have penalties and interest that are going back to April 30th.
Right.
So in my mind, and what I was saying to anybody is, take that June 15th deadline out of the equation, just focus on the April 30th.
Yeah, I totally agree. And if you are self-employed, I understand it's more difficult because as an employee, you get a T4 slip, you punch that in, and we're going to talk about the easy way to do that in a minute. If you're self-employed, okay, you got to add up all your revenue, all your expenses, a bunch of stuff you got to do. I suggest you be doing that throughout the year so that at the end of the year, all I got to do is add up the numbers and I'm good to go. So, okay, back to practical advice then. So the first top tip we had was know your deadlines. The second tip, now I think this is a good one. And you tell me what you think.
They're all good, Doug.
This one's gold, baby. This
Okay.
one's gold. And that is that I believe everyone should have an account with CRA. And I'm not talking about your social insurance number. Of course, you have an account with CRA.
Sure.
I'm talking about the ability to go onto their website and log in.
Right.
So I don't know what the official name of it is. I call it the My CRA account, but I think that's
I think it's my account. Or
my
something
account
like
is what it's actually called, but I can make up my own names because it's my show. So I'm of the view that you should set up your account. If you don't have one, like do it right now. Like pause the tape. This is not a live show. You
tape? Are you sure it's tape, Doug?
It's electronic tape, and show and do it now. Why? First of all, do you agree with that?
Yes.
Okay. Why? Why should you have an account? Because you can you can go to the tax preparer. They can file your taxes. You don't need to have a CRA
Right. And to be
account.
clear, this is separate from e-filing the return. We're not talking about sending a paper copy of your return. We're talking about a portal that individuals can have with CRA to access all kinds of information about yourself.
So tell me what information I can access about myself on this secret portal.
Well, not so secret anymore.
We just told everyone.
Well, but even, as a bit of a tangent here, like you referred to my, time working at CRA. So I've been here now, an employee at Hoyes Michaelis for 15 years.
15 years.
15.
My goodness.
It's flown by.
Sitting behind that wall
That's
for
right.
50. Okay. Yeah.
But even before then, like the CRA, my account was a thing. And there was a lot of promotion of the idea, but it's like anything that's new. It was kind of, people were slow to adopt it, like a little bit of skepticism, but then even basic human nature, making a change, it took time. But you can see all sorts of stuff. We're obviously much more digital compared to 15 or 20 years ago. So if you can't find your T4, right, or maybe you moved and your former employer issued you a T4, but maybe they mailed it to some random address you don't have anymore, you can access it online. You can track all those benefits we were talking about before. You can see the details of, here's my amount for the year, here's my upcoming CCB payment or my upcoming HST payment. It tracks all those things.
What about the CCR? Can you see that too?
Well, you know what? The CCR is very new, but I have seen the formerly known as the Climate Action Incentive Payment. I have seen the answer is yes.
There. So you can look and see, on January 15th and April, whatever, here's the dates. I'm going to get the payments. Here's how much I'm going to get.
Exactly. So you can track all the stuff. You can see balances owing. You can see all sorts of notices of assessment and reassessment. It has a lot of useful information.
So it's a no-brainer. Now, that's not the best part. The best part is the suck it in button, which that's not what it's called.
It's the non-technical term.
It's a non-technical term, but it's called autofill. So, and we're going to talk about this in a minute, but if I'm filing my taxes myself, I'm using some software, I can hit the button and suck it in.
Right.
But in order to be able to suck it in, I got to be able to get to the place.
Right. You have to have this My CRA account, right?
So that's really, really critical. The other thing you can do with it, I believe, is you can register your bank account with them.
Yep. And
you want to, if they're sending you money, you want it dumped right into your bank account. I don't want someone sending some check that may or may not arrive.
Yeah, and I mean, I agree with everything that you're saying, but I do encounter some people who are, rightly or wrongly, they are skeptical of the intentions of the government, so they don't want.
They don't want them to know anything about me.
Right. They don't want, I don't want to give them any more information than they already have. I don't want them to know about my bank account. It's like, okay. And that's your personal choice. But there are lots of conveniences to having money deposited directly, whether it's your benefits or your tax refunds or whatever.
Yeah, and I'm pretty sure the government knows about your bank account anyways.
Well, see, that's the thing, right?
Because every bank, when you get a bank account, they get your social insurance number, because if they pay you interest, they have to give you a T-slip. T5.
Yep.
So they're going to know about it. Now, I understand, I want to keep things secret. Okay, fine. Then have a separate bank account that you just tell the government about and have your whatever.
I don't want to get kind of bogged down in conspiracy theories, but there are some people who feel that way.
So if that's the case, fine. All I'm saying is I would rather get my money directly deposited than wait a week or 2 or 3 for some check to get lost in the mail, and then I got to follow up and all the rest of it. So to set up your CRA account, you're going to need your social insurance number, your date of birth, your current postal code. And if you haven't set it up before, you go on, it'll ask you a bunch of questions, and it's going to say, enter the amount of line 15,000. Mm-hmm. Is there really 15,000 lines?
I don't think there's 15,000 lines. I don't know where the numbering comes from, so I don't think there's 15,000 lines.
It sounds pretty great. That you calculated and reported on the most recent tax return you filed, which would probably be last year because you haven't done it for this year yet.
Right.
And the return you use must have been filed and assessed. and then enter an amount you entered on one of your. So you basically got to have last year's tax return to do it.
And that's kind of an interesting point because a lot of people, they, for different reasons, they get behind on doing their taxes, and maybe not like really. Not complicated tax returns, meaning like self-employed, where it's more work involved with summarizing, income and deductions, just simply slips, like T4s, like basic slips. So that person might say, okay, great. For whatever reason, I got behind by 3 years and now I want to get things up to date. I hear Ian and Doug talking about this, my account. I've heard about that before. Great. I'm going to do that. And I'm not sure that we said this, but one of the great, we did mention this before. So one of the great features of the My Account is being able to download your slips to see all the slips. But here's the kind of the catch-22. If you got behind by, say, 3 years, you can't create the My Account because you don't have that line 15,000 from the last 2 years to validate the account. So you might be trying to do the right things, and then, you hear us talk about this, you try to go online to get your tax updated, and you pull out your hair, you're frustrated saying the government can't do this, or they're not letting me get this My Account to get my things up to date. Well, if that's the case, then you have to go a little bit more old school, right? You might have to call up the CRA General Inquiries number. I'm sure you know that number off the top of your head.
Yes, I do.
Okay. 1-800-959-8281.
Exactly correct.
Right. So you have to call up CRA. They will literally answer some security questions. They'll mail you the slips. If that feels overwhelming, you might have to go to a professional tax preparer where you can sign an authorization form, and they can, even if you can't create My Account, they can access it as an authorized representative and get those things up to date. So sometimes it takes a little bit more effort if things happened that cause you to get behind in this kind of stuff.
Right. And the point is, once you get it set up, well, then it's set up. You don't have to reset it up every year.
Right.
You might have to change your password or something, but get it set up. And in order to do that, when you go through all this stuff, assuming you've got last year's return, you can set it up. It's going to give you a choice. Do you want to use one of our sign-in partners, or do you want to create a CRA user ID and password? And I'll throw this up on the screen. The sign-in partners would be one of the banks. So you bank at Bank ABC, you already log into your bank account, you can use the same login.
And when you do that, when you go to the My Account, you click on the sign-in partner, you click on, if you do it this way, you click on the bank that you use, and it literally takes you to the sign-in screen for your bank. So it's the exact same login credentials as your bank. And then it redirects you back to the CRA site.
And that sounds great because, I don't have to remember a new password. I've already got the password for my bank. I think it's a bad idea because what if I want to switch banks? And every person we deal with here, when they come in to see us, we say, oh, you owe money to your bank. You better open a new bank account in a new bank. So I personally prefer you to create an account directly with CRA, and that way you can change banks, doesn't matter.
Right.
Agree or disagree?
I think I think for the majority of people, I think the sign-in partner works fine, right? But I can see how it might be less work. But I don't know that it makes a big difference. I'm just thinking about my comment a few minutes ago about, people who are skeptical about the government. So now I was already skeptical about getting a direct deposit. Now I click a few things and I go from the government website to the login screen. And now, are they seeing all my passwords for my bank account? And some people are going to be very skeptical about that kind of stuff.
Yeah. So, and again, make your own decision, people. I just think you have more flexibility if you want to switch banks than if you don't have it linked in with CRA. But I agree, it's obviously easier to have one login instead of another. So
right, but then also, I don't have an answer to this, not being an IT expert, but I assume that part of the reason for that is that CRA, that they're thinking that the security through the bank websites is probably stronger than what they have from their own website.
That's probably true, but I don't trust anybody, so I can't comment on that. So, okay, so back to tips then. So we both believe you should set up your account at CRA. Tip number 4, gather all your documents. Things like rent receipts, charitable donation receipts will not be in your CRA account because they're not an official receipt. So gather those. Tip number 5, make sure you're claiming all legitimate deductions if you got moving expenses, tuition, whatever. Now, tip number 6. I believe that if possible, you should do your taxes yourself because that way you understand how much money you're given to the government.
Right.
And it is actually possible to file your taxes for free. So I'm going to put a link in the show notes to the CRA website that lists a bunch of different free software. Now, I'm not going to mention any of them on the show here. other than maybe we'll put the graphic up on the screen, because none of these people are paying me to advertise. You want to advertise on this show, you write me a check. But there are a bunch of them. Yeah, exactly. It's pay to play. Yeah. But there are a bunch of them that you can use. And the beauty of these is you use them and you can autofill your return as a result, no mistakes.
Yeah. And you know, when you go through like the list that you have here, when you go through them, if you go to the individual sites for the software companies, I mean, you see like a recurring theme about the features that obviously they're set up to be e-file compatible. Mm-hmm. You can do the autofill or suck it in option you referred to. You know, they have, I mean, it's hard for me to be like a really strong proponent of one over another because they seem like they're very similar in terms of their features. But I think it definitely gives you options if, you know, like people resent the idea of having to, you know, pay a fee to shop at certain places. Well, understandably, people resent a fee to be able to file your taxes just to tell that you owe money to the government or to get the money back that you're entitled to, right? So I think it's good that there are free options available to you.
Yeah, and I, you know, in full disclosure here, I use a paid program that I've been using, I think, for the last 10 or 15 years.
Yeah, and I do as well, Doug. And something, it's the comfort level.
Yeah, and I think it costs me $20 a year or something. I can file my return, my wife's return, whatever. Whatever you do, I believe you should use the same one year after year, because then in addition to the suck it in feature to get this year's data, you've got the carry forward feature to bring in last year's data. Because my name didn't change from last year, my birth date, my social insurance number, all those things. So it's nice to be able to say, set up my return based on what I put in last year.
Yeah, I had the same kind of attitude. Like I'm okay with paying a small fee for that convenience. And it rolls forward things like your, you know, if you're contributing to an RRSP, it rolls forward that kind of contribution room, other stuff that might be relevant for this year's taxes.
Yeah, so that makes it that much simpler. So, okay, again, do your own research, figure out what's going to make sense for you. Tip number 7, and we're kind of short on time here, so I'm going to go through these quickly, but tip number 7, notify CRA of any changes. So if your address changes, let them know, because if they're going to mail you something, you kind of want it to get to your place. If your marital status changes,
that's a big one. That's a big one. Right there.
You got married, you had a kid, then that changes all these benefits we talked about.
Well, exactly. Like a lot of those benefits we talked about have like an income component where the amount that you receive, if anything, depends on your family income. So that's potentially very different when you're single compared to being married or common law.
Yeah, so you want them to know.
Right, and it could be that it reduces your benefit, it could be that it increases your benefit.
And if it reduces your benefit, you don't want them overpaying you because they're going to claw it back, and then you get penalties and interest and all the bad stuff. So, and then obviously banking information, if you change your bank account, you better tell them, because otherwise they'll be sending it to the bank account you closed.
They're robots. You don't want them trying to put money into an account that you don't use anymore.
It's not good. And then tip number 8, I am not a fan of tax discounting services.
Yeah, I just looked down at my notes here, discounting. Yes,
yeah, that's very bad. One. Yeah. And so give us the 30-second version of what I'm talking about there. Okay,
so this is where you go to a professional tax company, they prepare your return, and it says, okay, Ian, you're eligible for a refund. So discounting it means that they give you effectively money today, but then your full refund gets sent to that company when the refund actually gets issued by the government. But discounting means they don't give you the full refund. They discount it, they reduce it by some amount, which means they're actually making some money from it.
Right. And again, I'm happy to pay someone to do something, but I would rather say, okay, your fee to prepare my taxes is $150. Here's your $150.
Right.
I don't want to be ending up paying $300.
Right. But I mean, without naming names, like there's a certain company in Canada that is the most recognized name. I went on their website to make sure I got the numbers straight. And the way their discounting program works is that you pay 15% on the first $300 of the refund and then 5% thereafter. So do the math on that. So let's imagine that you're eligible for a $1,000 refund. So 15% of the first $300 is $45. 5% of the remaining $700 is another $35. So what that means is they're not giving you $1,000. So that calculation I just did quickly.
$80.
Thank you, Doug. Thank you for verifying.
Did it right here.
Yeah. So that means they give you $920 today, but then within a short period of time, like a week and a half or 2 weeks, that full $1,000 refund goes from CRA to the company. So you paid an extra $80.
And are they still charging me to prepare my tax refund?
You know what? And
I guess it depends on the dollars.
Right. But again, candidly, I literally had a client years ago here who worked at one of these companies, and she was telling me about how they kind of work the numbers, where they don't give you like a dollar for dollar credit, where if the fee was going to be $150, they don't just charge, and this $80, there's this extra $8, they don't just charge you another $70. Otherwise, there's no extra benefit for them. And she had this loose way where they kind of monkey with the numbers a little bit, and really to their benefit.
Of course.
Right. And when I was on the website for this company that shall
remain nameless.
Yeah. It was interesting because, again, they promote certain benefits to this. And one of the benefits is I have money right now,
away.
right? And I would say, well, unless there's something critical that I need money right now today, why would you pay that extra fee? I can wait the week and a half to get my full refund. But maybe, I'm going to never say never. Maybe there's a compelling reason. But what really struck me was when it said, okay, one of the benefits is there's no credit check. And I thought, wow, that's a really interesting comment, because what that is highlighting is that, honestly, I never thought about it this way, but clearly what you're doing is borrowing money, right? You're borrowing money today, you're repaying it sometime in the future. And they very clearly acknowledge that by saying, hey, look, there's no credit check. You can borrow money today with no credit check.
Yeah, and that's because they've gone into CRA and they know exactly how much you're getting back.
Right.
So it's essentially
it's
a
pretty low
loan.
risk for them.
Right. Yeah, and Ted and I did a show on the criminal interest rate from the criminal code, which is being updated. There are only 2 exceptions to the criminal code interest rate. One of them is payday loans, and the other one is tax discounting.
Right. So the scenario that we just described, if you're paying, if you're borrowing $920 and you're paying $80 of effectively interest, and you're paying that back to...
It could be a 5-day loan.
Right, exactly. It could be like just a very, very short period of time. And I can't do that math in my head, but that's way more than any kind of reasonable interest rate.
If it's a 1-week loan, you multiply by 50, 80 times 50. I can't do that in my head.
It's about 4,200-ish.
So there you go. That's a 42% interest rate.
Right, ridiculous.
It's ridiculous for what you're getting. So... and again, we'll put I'll put a link in the show notes to a blog post we did on this, but you're going to get your refund if you e-file in a week, 10 days, 2 weeks, something like that. So we don't believe it's worth it to be paying a lot of extra money
unless
to get it back.
Unless you need the money now.
Today's the 28th and I got to pay my rent on the 1st and I don't have the money. Fine. Maybe it makes sense, but we are not a big fan of that. So make sure you understand.
I hope that was clear. Not a fan.
Not a fan. We're not a fan. Not a fan. So, okay, final topic, and we're already over time here. And that is, okay, I get my tax filed. I did everything you guys said. I set up my account, boom, but I owe money.
Right.
And so the answer is, okay, again, like as with everything else in life, don't ignore it. Get on the phone with CRA, work out some kind of plan.
Right. And that's always with any kind of debt, like that's your first option, or try to work it out, work out a plan. I took a call last week from a woman who is a previous client of ours, and it's not a big number, so I don't think she's going to be looking at doing a bankruptcy or proposal, but she was struggling with talking about payments to them. I said, no, here's the way to talk to them. And you don't want to shy away from it, because with anybody, if they don't know what's going on, it's really hard for them to work with you. So I'm hopeful that she's able to work out a payment plan for that. But as you know, Doug, right, we have a lot of people who end up doing bankruptcies and proposals because they have tax debts that they simply cannot work it out with them.
Yeah.
That's with CRA, that is.
Yeah, and if you owe, $1,200 and you can afford to give them $100 a month, give them the $100 a month. Right. Everything's good. You get caught back up with them. But if you owe them $10,000 and you can only afford to give them $100 a month,
that's going to be the numbers tend not to work.
Right. Then I think you're going to be talking to us about a consumer proposal or a bankruptcy, because a lot of people don't know this, but yes, Revenue Canada is included in a proposal or a bankruptcy.
Very, very common,
just like everybody else. Yeah, it's I know they're the government, but no, we use federal law. They're subject to federal law. It's still included. So if you got more tax debts than you can handle, don't wait for them to start freezing your bank account and garnishing your wages. Right. Give us a call. We can help you work something out. So. Okay, well, that's fantastic. A whole bunch of, I think, very practical advice there. So again, we will put links in the show notes to everything we talked about so that you can follow up. And in fact, I'm going to put links to all the CRA stuff. So if you don't believe what we're saying, then you can go right to the source there and find all their free tax software, due dates, all the rest of it. So Ian, thank you very much for being here.
Always a pleasure, Doug.
Thank you very much. So, as I always say, please like, subscribe. You know how to do this, right? You click the notification bell, the bell thing, everything and do all that, because somehow that makes everything great. I'm not quite sure how it works, but please do that so that you're notified every week, every Saturday morning, a new show comes out. Obviously, we're on all the podcasting platforms as well, Spotify, Apple Podcasts, and so on. So please subscribe wherever you are. You'll get the show every week. So until next week, thanks for listening. I'm Doug Hoyes. That was Debt Free in 30.